Good day, everyone, and welcome to Wednesday live trading session. And finally, we are here on Wednesday. We will see if we will have follow-up from our excellent session recap. Guys, I need to tell you that session recap, euro-dollar, was very, very good and even much better than I originally expected. The trade that went into stop loss was pound-yen, but euro-dollar was clearly a winner from our session recap. And it was the trade of the week. For me, it gave us really a lot of pips, especially since it was a counter trend trade opportunity. Also, setups from previous Wednesday live trading session went in profits, and I hope that you are happy with this 7 days trading, summer time, and we still have great trades going on. Volatility, as I always say, is still our friend. So before I actually start with live trading, let me say that patience is always the key to trading success, and you should always be patient when you wait for setup. If you want to rush in a trade, have in mind that you can make money much faster, but also you can empty your account much faster too. So you definitely need to find a balance, and that is why I say always wait for the market to come to you, because market is like a shadow. If you stand still, it will come to you. If you chase it, it will definitely run away. Before we start, standard disclaimer explaining all possible risks associated with Forex market, and have in mind that Admiral Markets is not responsible for any of this information. This is my own opinion. This is my trading account or accounts, if I show you 2 or 3 accounts. And definitely, this is how I trade, my setup. Also, CMD and Forex trading are leveraged products. Always have in mind that you can lose. Losing is part of this business. Forex trading is risky. And these slides are not part of the .co.uk website, but the globally used .com website. So definitely, risk is there, but every business bears a substantial amount of risk. So you need to be careful when you trade. So if you trade within the risk threshold, well, you should be always on the safe side of the market if you know what to trade. But that is why I'm here to give you setups, trade with you, and show you the best possible trades. Rules and setups. We will use POC zones, master candle setups, full waves, price section. Everything from my price action trading school. Everything you see here is my personal opinion and trades. I always trust my own guns. I don't read social networks. I mean, I read it from time to time, but I don't have any bias. I don't care what other people trade. I just take a look at my own charts and see what price is doing. Based on that, I do the analysis. But of course, I respect every trader's opinion. As always, everyone has their own right to think how to trade, where the price will go, or which method they will use. I use Camarilla MACD method for this setup. Camarilla MACD, also practical naked trading. That is also a part of price action trading school. And of course, my own method that I developed that is called Camarilla MACD, based on Camarilla indicator and confluence zones. No setup, no trade. That is why we can use pending orders. Once you're in a trade, you need to do your own trade management. Recommended risk is 0.52%. Okay, this is typo, so it should say 0.5 to 1%. Guys, try to go with low risk. You want to trade like professionals do. That is my point. My point of trading is to teach you how to trade and to teach you how to make money. I want you to make money, be it a part-time or just for additional profit, or listen to me. Losing is part of the business. Keep your risk under control. Trades, session recaps are from Monday to Wednesday. Pending orders are valid from Wednesday to Friday. Have in mind that Friday is a day to take profits. So you definitely need to use profit stops in order to protect your profits. Few comments before I start. Nenad, the euro dollar was great, but I got stopped pound yen and missed euro dollar order. Well, Mohammed, next time you visit session recap, have in mind that the POC zone is 15 pips. So if I said that you can sell euro dollar at 1.0720, it means 10700 and 1720 and 10735. Keep stop loss intact. That is the POC zone based on my analysis and future price action. So definitely you need to use it. Try to practice on demo account. And of course, then if you're successful, go with live account. Marco is saying some traders say August is not good for trading because of holidays. What do you think? Marco, I think that we can trade in August. Of course, a lot of traders are not trading. It's not the same, but it's simple. If you want to take 10, 15, 20% of the ATR, it's still okay. You need to know that trade levels and target trade levels are lower than when we have a full trading season like September, October. So you can still trade during August, but lower your expectations. Also, I'm very good, thank you. And yes, let's go to see the screen now. I will answer your questions, of course, just a little bit later. First, we need to see what we have here. And then, of course, we will see what we are actually. Okay, do you see my screen? Yeah, first I need to show you actually slides here. Trading opportunity. I will go with long again on euro dollar. So this is, guys, what I also teach you and what I taught you in price action training school. So here you see it's like two orders. I mean, if you followed my trade recommendation and trade setup from euro dollar last time on Wednesday live trading session, you know that I basically made something similar. This is called scaling in based on two POC zones. So now for euro dollar we have two POC zones. The first POC zone is around 0.620. The second POC zone is around 0.585. Target is 0.690. Stop loss is 0.550. How you should approach this trade? This is pretty much simple. Yes, guys. Yes. Sorry. You know, I have a lot of things to prepare for this live recap. And now, sometimes from time to time, I make small errors. I really need to be focused on trading when I do this. So neglect these little typos. Of course, it's 1.16, 1.15, and I will correct it right now. So you know what I mean. I mean, it's pretty much obvious, right? So let me show the screen again. Okay, so this is corrected, the screen. Indeed, Eric, thank you for reminding me. 6, 16, 26, 1.15, 85, 1.60, 90, 1.50. So this is my setup. How you should approach this trade is very simple. Why it's simple? Because I teach you to trade simple. Always keep it simple. You trade with the best broker, with officially the second best analyst according to Forex Street, and of course my analysis is like 80 to 90% accurate, so follow it. Here, 1620, 1585. Why? Because this is the zone. When the price gets here, open 0.5%. Now, guys, please have in mind, this is how I trade. I cannot tell you to do something if you don't want to. This is how I personally will trade. This is live trading session, and this is the setup. 0.5% of risk here, 0.5% of risk here, or 1%. Total risk for this trade is in between 1 to 1.5% of risk. Why? Because we keep our stop loss at 1550. We do not move our stop loss. We do not move our stop loss. Okay? I see the message there is no audio. I think audio is fine. The sound should be fine. I don't think that I think, yes, the audio is fine. Yes. Okay, good question, Egils. Can we keep those setups till Friday, or we should close before FOMC? I advise you, if this happens and you are in profit, I advise you to close before FOMC. FOMC will be very risky event. So as always, guys, if you are in a trade before FOMC, protect your profits, because FOMC definitely will. I think it's always volatile. So please, if you're in profits, keep your profits. Ideally, this should happen before the FOMC. I would like to happen now, and I will open a trade. But if it doesn't happen, wait. Also, guys, this trade level here, 1580.85, maybe I dare to say it could possibly be traded during FOMC. But have in mind that your stop loss is 1550. Add 2 to 3 pip spread, so it's like 1546, 47, right? Also, do not risk more than 1%. Okay? Okay, do not risk more than 1%. This could be the trade for FOMC if the price drops. Now I will show you the chart, and I will tell you why I think so. It's important to understand the logic of this. Okay? Here, euro-dollar trade setup. Do you see this? This is master candle range. Master candle range is clearly shown here. Okay, 0.620. Do you see my chart, guys? I think that you can see my chart. I'm showing you MT4. You should see MT4. Great. I'm using multiple monitor setup, so sometimes I just want to make sure that I'm showing you the right screen. Okay? Here. This is it. 0.620. Look at this, guys. I will mark this here. Now, this is the range. This is master candle range, and this is our important weekly L1, weekly H1, and weekly Camarilla pivots. What does it tell us? And these are daily pivots. So this is telling us that the price is waiting for something. This could look like head and shoulders, but don't forget that this could also be a consolidation pennant, because this is not a pennant in its full sense like we used to see usually on the chart. This could be a rectangle sort of pennant, okay? And we definitely need to see where this consolidation will break out. But because it's a consolidation, we might see also some retracement. If we put our Fibonacci tool, okay, from the top to the bottom, as I always teach you, from the left to right, you can see that 38.2 is 1622. It has a confluence with daily L3, ATR pivot. Also, historical buyers here. See, these are historical buyers here. A lot of buyers here, guys. A lot of buyers. See, historically. So what I think is, if the price gets here, because it's a consolidation, there is no clear breakout movement now. We could see a rejection. But because it's like, you know, FOMC, whatever. If this trade during FOMC gets to the second POC zone here, I would rather open this position, not risk this one. But if it happens before FOMC, then what you can do, that is why it's important to use low risk. I mean, you cannot open, I don't know how other people trade, except for traders who I know of. I mean, most of traders will not show you how they trade. They will only talk about trading, but they will never show you live trade example, live trade account, teach you how to do that properly. This is, in my opinion, the only proper way. If you trade with $10,000 account, you cannot simply open one lot here and one lot there, because then you will be over risking. Okay, calculate your own capability, your own account capability, your own, the total sum, the equity of your account. How big is your account? According to that data, you should calculate the risk. So that is why I say scaling in. If the price gets here, we would open 0.5% risk position. So 0.5% is always fixed. It's not in the amount of loss. It's not the same, because 0.5% on $1,000 account is not the same as 0.5% on 10,000. The lot size is different. Think about it, what I'm saying, guys. It's extremely important. Without it, you cannot have long-term success in this business. It's very, very important. It's crucial that you understand this principle, what I've been teaching you. Okay. So 0.5 and eventually 1% of risk here. Because if you lose, you would only use 1.5% of your account. That's nothing, guys. You can easily make it up. But if you risk 10, 15%, I know the feeling is great, because if you get 20% in a single day, especially if your account is big, like 2,000, 3,000 euros in a single trade, it can be alluring, right? But in the long term, it won't bring you success. Believe me, guys, I've been there. I actually managed to get 6,000 euros in a single day on my bigger account. But then at the end of the month, actually, I had 585, something like that, euros, not profit, but a loss. I'm telling you now from my personal perspective. I had 6,000 euros in a single day. It was like 3.5 years ago. And at the end of the month, I was in a loss. So do you think how I felt in that moment? What do you think, really? So that is why I'm teaching you to trade properly. Since then, I've told to myself, okay, Nenad, you can be 9 times right. But that single time, one single time, if you're not right, by over-risking, by taking over-leveraged trades, you would lose each time you do that. And since then, I don't do it. I mean, I can afford big risk if the account is low. If I open account with 500 euros, I really don't care. I can afford bigger risk. I can afford to lose everything, but I will use 20, 30% of risk, because it's like you want to build that account, you want to take the money from low account. It's like some sort of risky trading, because if you want to make something out of small money, you need to make a bigger risk. But if you have a bigger account, then if you really want to keep it longer term, you need to do it as I tell you. Always. So for you to trade properly, low risk is the key. Because you don't want to make 50, 60% of profits in a single day and then lose everything in a single month. Muhammad is asking, I have $10,000 account. I aim for like 100 daily. It's okay. Muhammad, on $10,000, $100 daily or pounds, it doesn't matter. It's okay. But have in mind that when you make, let's say, in between 10 and 20% on your account, I would advise you to stop trading, because psychology can kick in, and not because you make bad trades. If you lose, you might make a revenge trade. Guys, it's important to know when to stop. That is why I always say make a trading plan. If your plan tells you that you want to make in between 5 and 15% per month, If you make it, respect your plan. Stop trading that account, open a smaller account, and trade whatever you like. Trade with 0.1, 0.2, 0.01, something like that. Guys, I'm telling you, you will not lose because you make bad trading decisions. You will lose because your psychology always wants to make up for the bad trades, and you make revenge trades. It's not easy when you make 15% in 5 days or 10 days, and you lose everything in a single trade. You want to revenge it, and you just keep on losing. You are in a downward spiral. That is why I'm saying, what is your trading plan? Are you aiming for 1% or 10% per month? I honestly, guys, with 100,000 or 100 euros account, for me, 2% per month is perfectly fine, 3% per month. If I trade with 50,000, then I would go with, let's say, 5 or 10% per month. If I trade with 500 euros, I want to make 100%. You know, guys, it's different. Think about what I'm saying. It's not black and white. It has the shades of gray. That is why I'm saying we can every time we can trade the same strategy, same setups, but at the end of the day, we will have different results. Yes, small accounts will put pressure because you want to make more. But that is, you know, guys, I personally know a lot of traders who like to trade smaller accounts because it's much easier to make 500 out of 500 on small account if you can afford to risk than it's if you go to casino and try to gamble. I mean, you know, I showed you many examples of my trading accounts, how I made from small accounts, how I doubled it. But I don't do that on big accounts. I made in between 2 and 5% per month, and I stopped trading big accounts. Big accounts are 100,000 euros and more. It's still good, right? Because at the end of the day, I want to risk profits only, not the equity on big accounts. Because bigger accounts are like investments. Smaller accounts is like you make money, you withdraw money. Okay, it's different approach. Okay, let's get back. Euro dollar is going up. So I don't know if it gets here, but during FOMC, if it gets to 1580, I will open a small position, and then I will use 35 pip stop. Okay, and I think it could reject again because it's effectively in uptrend. Let's use more examples I have here. This is what I will do with pound yen, guys. I will do something with pound yen. You know that our trade setup actually went bad on session recap, but yet again we covered that loss on pound yen because it was only 30, 35 pip, 40 pip loss, not big. We had great trades, especially with euro dollar and even dollar yen. So this is now, I think, pound yen is in uptrend, okay? But this is what I see, and I will show you now. I'm showing you now here euro dollar. Now I will open pound yen. I really want to see pound yen more to the upside before I sell it. Here, guys, you see, this is effectively like some sort of downtrend. But if you watch 3 previous days on pound yen, well, 3 previous days are bullish. This is the box indicator that I've been freely shared with you. Elite currency box. So it shows boxes here. Blue box tells you that the pair is uptrend. I mean, this means that that day was bullish. So this pair is definitely now in uptrend. It has 3 bullish consecutive days. This could be a correction, guys. But to me, this looks like very bullish. So what can happen? This is why I'm thinking to sell here. I think it's trying to get towards this spot. And look at this, guys. It's above weekly H3. it's going towards weekly H4. Okay, it's been rejecting from weekly H1. Okay, here you see weekly H1. Even here it was weekly L1, and now it's going up. This is an uptrend. If we want to make a trend trade, then we really want to see this pair down a bit. But because this day also, you see this day in this box, it's also a bit bullish. You see how the price is making a U-turn against this mini support here. You see, this is now a sort of zigzag. You can even make a trend line here. And you see how it's trying to go up. But for me, this is very, 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 I can say, risky to sell now. Although maybe because of this mini resistance, it can go down. But I personally would be patient with this. Because guys, watch this. Weekly H4, ATR pivot point, a lot of sellers. Much more sellers than we saw here. You see, this is where sellers are. Triple top. Why not sell it there, right? Now, if we put a Fibo here, you see, 61.8, exactly, Mohammed. 61.8. A lot of confluence here, guys. So, this is what I am waiting. I've been waiting. You know, that is why we want to make a pending sell order. Now, because of volatility that we will have today, don't forget that we will have crude oil inventories. Crude oil inventories is not just a CAD data. It can also affect pound yen, because pound yen is moved with equities. Okay. Here, if you open, let's say, Forex Factory calendar, here, you see crude oil is scheduled in 1 hour and 15 minutes. So it means that this data will move CAD, it will move pound yen too. So what I think is, if pound yen spikes towards this region, if the data will push this above, I think that it could be rejected, if not immediately, then we should wait for the price to settle down a bit. That is why I will put my stop loss at 46.80, above this ATR projection high. Now, if this happens now, I will take my chances and sell it here, if this happens now. So that is what I think about pound yen. Australian dollar New Zealand, also interesting for me to buy. 0.620. Australian dollar New Zealand, maybe we can see a trade very soon. Here, first of all, we have weekly L1 that is also very strong, but most important, this is daily L5. This is also ATR low. So if the price gets here, the range is low, I think it could reject and give us some pips. Definitely, definitely, I'm waiting for this. Maybe this will happen during this webinar, but let's wait. Let's wait. So this is a trade that I will now put a pending order, guys. I'm very interested to see this pending order. I have a lot of, as you know, different accounts with Admiral Markets, and I really need to manage them all, and that is why I prefer to use this monitor setup. Okay, so I will also do it here and on other screen. So this is how we will do it. Okay, so Australian dollar New Zealand, new order. Okay, this is buy limit here. Okay, we will use, okay, the 0, 1, 60, 20. Please hold on with your questions because I need to focus now. Pending order is 0, 5. Okay, I will keep this overnight, guys. I will keep this overnight. 85. Okay, let's see if this hits. Pending order has been placed. Okay, let's see. We need to do that also. I'm making now, guys, positions. So please bear with me. I need to make this also on other account. Wait, this is how I do it. Okay, on other account. Now, these are my trades, as I always tell you. So I will make this also on other account. Okay, same trade, pending, exactly now. Whew, how many things we need to manage, really. It's a bit awkward when you do this. Okay, now time to get back to this potential trade. Okay, I managed to make these pending orders based on my analysis. Here, POC zone, weekly Camarilla, ATR low, daily F5, master candle range low. I mean, really, do we need more? No, I don't need. This is a naked, blind trade. And that is why I'm saying, if the price gets here, I will buy it, and I made a pending order. Even here, guys, 626, 27, I might make smaller, and then I can add it here, keeping the stop loss intact. I don't need more than this. I don't need fancy indicators. The price, when it gets there, will probably be in the red zone on CCI, telling me that the price is oversold. In uptrend, guys, we buy when price is oversold. In downtrend, we sell when the price is overbought. It's always like that. Okay. Now, let's see what we have here. Okay. Another order I just made is a breakout trade on pound yen. I made it on my, I will make it here. Let me see, guys. Let me check. It's breaking through daily H1, and this is bullish to me. Okay, the CCI is going above zero line. I will buy this now. Okay, I'm buying this now. Okay, pound yen order has been initiated. It's a breakout trade setup. This is retest trade, guys. You remember how I teach you to trade breakout, retest? This is retest trade. Okay, here, 45.90. Let me do this also on my other account. Breakout, retest, trade in progress. Okay, I did it here also on the second account. You see my trade here also, guys. You see, this is different. This is with MACD, but also you see it's trying to break here above zero line. What I've been teaching you, when MACD 2 lines are above zero line and they are showing this thinning histograms, it means that a trend is still to the upside. Definitely this is upside. This is a retest trade based on this mini head and shoulders here, an ATR pivot point. Now retest has been done. I think this should go up. My stop loss for this trade will be here, 145.45. breakout trade. It does not need to have big risk to reward. But my final target is where I will sell 146.30. Then I will sell. Okay, so this is where my targets will be. Okay. So I will show you now, guys. So my target is 146.30. Okay, here my stop loss is 145.45. This is breakout trade setup. It's not a trend position. It's a breakout trade. Okay, let's move to my main chart. Okay, guys, please bear with me. Okay, I'm trying to juggle between all these monitors, all these setups and trades to give you the best setup. Okay. So pound yen here also, you see CCI is confirming the trade here, and I'm buying this at this spot. Okay, the versions also present, so very easy, very clear to me. Now the question: where is the stop loss for Australian dollar New Zealand? Here is your stop loss, guys. Here is your stop loss. Okay. Now I need to correct this slide. So for pound yen, we also had market order initiated. Okay, here market order bought at 145.90, stop loss 145.45. Okay, TP 146.30. This is breakout retest setup based on what I've been teaching you. Okay, guys, here. Now this could be clear to you, okay? And where we did it, easily seen, whatever chart here. I mean, it's easier than to show you this screen, because on this screen I didn't put my Camarillas, all Camarillas. This is the extended Camarilla with H1 and L1 levels. Usually these H1 and L1 levels give you breakout setups based on a trend. So here you see the price is going up, and definitely this could be a retest of daily Camarilla and ATR confluence in this mini inverted head and shoulders. So this is why I made this buy setup. Ahmed is asking, pound dollar and pound yen are correlated. I wouldn't go with pound dollar now, simply because I think that equities are really connected with pound yen, and a lot of times if equities are moving in one direction, pound yen will follow, but pound dollar will not follow, because pound dollar is not based on equities. Yen is correlated with equities. That is why it's important for you to understand that logic. Next question, can I check euro dollar? Of course. Euro dollar is still going down. As I said, 0.620 is buy. Well, just keep the risk on your mind when you trade it. Stop loss on Australian dollar New Zealand, I was clear with it. 0.590, add the spread also to your stop loss, guys. Add the spread to your stop loss, please. Okay, here. No, this is all. Okay, here. This is it. And two more questions, guys, and then we are ready to go. Can I look at gold and dollar CAD? Dollar yen, I didn't make any position on dollar yen now. Standard, I made market breakout buy. on pound yen. Based on retest, we have pending order in euro dollar, pending order in Australian dollar, New Zealand, and this pending order will carry on to next day. Euro dollar, I will not carry on to next day. I will take care in, I will consider FOMC. Dollar yen, I haven't made any order on dollar yen. And if you traded dollar yen, you should made your profits by now because it rejected from these spots and you should have made it by now. Pound yen sell order before FOMC, please. Before FOMC, I will not trade pound yen sell. I have a buy set up now. The only thing where I should sell if it happens after the FOMC, but not just during FOMC, because dollar yen and pound yen will also be very volatile. Next question is, can I take a look at gold? Yes, gold is here. This could be the last chance for the uptrend to resume. And if you already went long here, this was your opportunity to go long. It's easy. It's spotted by my naked eye. You have order blocks here. You have rejections, historical buyers, daily L4. So this was the zone to go long. The only way that I see continuation is if it breaks above daily H1. If it breaks above daily H1, you will have your setup. For Camarilla, email to me. Send an email. I can send you free Camarilla, but free Camarilla indicator does not have these levels here. It has weekly and daily, and it cannot overlay it. For all the info, please send an email. I will send you the free Camarilla indicator. If you want to sell on gold, this is where I will take a look at. This is the spot to sell gold. Daily H3, it hasn't been tested today. So 1252, somewhere around this region, you can go for a sell. Eventually, small scalp trade can be done here, but I would prefer daily H3. Okay, guys, Euro, New Zealand. Oh, this is non-tradable at this point. This is just up and down, up and down. This is big, big range now. You see how the price is moving. It's sideways. I don't trade sideways moving market. Sundar, I will reply to your email regarding Camarilla indicator after this webinar. Please be patient. I will reply. I have tons of emails. I cannot. Sometimes I miss it, but you know that is how it goes. Most of them I send. Australian dollar is also in the range 63, 69. Sell here, buy there. Definitely, this is range-bound market trading. And dollar CAD. Okay, let's see dollar CAD. As I said, dollar CAD could reject from lower levels. The point is, dollar CAD has rejected, but I had a smaller position that was closed, unfortunately, to break even. But I think that dollar CAD now is having a retracement. Trade from weekly L3, it can go to weekly H3 Camarilla pivot. This is what I see here, and I think that dollar CAD could be bought. But guys, crude oil will move dollar CAD. Be careful, please be careful. If it goes below weekly L3, 29, 50, 60, 24, 50, 60 is the way to go with buy order. Remember, 24, 50, 60 if it breaks below on crude oil. And finally, before we close, this is it, guys. We have euro dollar scaling in two positions here, 0.5 total risk. We have currently market order here. Sell order if it happens before FOMC. No matter what FOMC brings us, this trade I will carry on to next day because it's Australian dollar, New Zealand. It's not correlated to FOMC. The last question: how to decode EX4 to MT4? It's forbidden. Okay, This is important, guys, to do this. Okay? Decoding EX4 to MT4 is forbidden. If you do that, you will actually you are hurting the copyright, because EX4 indicators are made from coders to protect their own property. You cannot decode EX4 to MQ4. It is forbidden. Do not do that. It's not according to law, and it's not according to trading moral. I mean, if you are a trader, if you really appreciate what other people do, you will never ever try to decode anything from EX4 to MQ4. Please respect other people's work. Thank you guys for listening. Uh, uh, and if you want to add to MT4, it's pretty much simple. It's important. Go to File, Open Data folder. Then you go to MQL indicators and paste it here. When you paste it here, okay, when you paste it here, definitely what you need to do is you just need to restart your platform. Okay, restart your platform, and you should be fine. Okay, this is now showing other screen. Okay. Okay, guys, now I definitely need to move. My other screen is blocked totally. I will show you on this example, and then we will conclude this. Okay. So if you want, guys, if you want to install the indicator, go to File, Open Data folder, MQL4, Indicators, paste, and refresh. So that was it for today. Let's see what market will bring us. And do not send email to me. Do not send your addresses. Please send an email to me, tarantulafx@gmail.com. And then I will reply, okay? Do not send your emails directly to this chat. Okay. Thank you, guys. Talk to you soon. Hope that you enjoy the setups. Let's see, pound yen. I will protect my trade if I'm in a good profit before FOMC, of course, and probably before crude oil. Thank you for listening. Cheers, everyone. Trade safe.